Hello everyone, I'm Dr. Chet from The Standard. You may have read my articles before in The Standard years ago. I'm very glad to see you again in this video, sharing information about the Hong Kong stock market. As you may notice, the Hang Seng Index today climbed above 30,000 points to almost 1 year high. Many investors start to pay more attention in the Hong Kong stock market. Some analysts said, it's a bull market comeback. Do not miss the chance to make money. Is this true? Looking at various fundamental factors, personally, I would maintain a cautiously bullish mood for the time being. It is likely that major governments around the world will continue to maintain its quantitative easing policy under COVID-19 pandemic. With abundant liquidity, I think money will keep flowing into stock market, and Hong Kong stock market is lagging behind the US markets. And shares of the new economy will continue to be the focus of the investors. You may recall about the listing of Alibaba code number 9988 in November 2019. And as you know, 2019-2020, the Hong Kong stock market is not that good because of so many incidents happen in about Hong Kong's political environment. But how was Alibaba's shares performance? Do you remember at what price does its IPO being priced? It is 176 Hong Kong dollar. And actually last year, it once went up to 309 Hong Kong dollars. But in the last few months, there's not much good news about its founder, Jack Ma. You know, Jack Ma has talked about something in his seminar, criticizing the China's banking system. This drew attention from the regulatory bodies, and now you cannot see Jack Ma until a few days ago for the last few months. But what's the price of Alibaba? Today is still at a very high price, $260. That means 47% above its IPO price. Despite the stock market is not that good, Alibaba's shares still outperform. And another example is Tencent. It was listed in 2004 at $3.7 per share. After it split 5-for-1 share split, the IPO price is only 0.74 Hong Kong dollar, 0.74. And what is the price now? 700. That means since 2004, share price has risen 945 times. Amazing, isn't it? So from Tuesday tomorrow, you can have a chance to apply another new IPO, which is a new economy shares. The name is Kuaishou Technology. It is the first short video company listed in Hong Kong. It will offer 365 million shares, which is equivalent to 8.9% of this total share after listing. It will raise about $6 billion or Hong Kong dollars 46.8 billion. And the IPO price will be around 105 to 115. For public offering, only 2.5% will sell to individual investors. If the share is being oversubscribed, it will increase to 6%. So this company, second largest short video company in China. After listing, its valuation will be $60 billion. It will be listed on the 5th of February. 100 shares will have one lot, and then the price is around Hong Kong dollar 11,600. Looking at the fundamentals of Kuaishou, its valuation is $60 billion, which is only 1/3 of its competitor, ByteDance. ByteDance has a very famous TikTok and Douyin sister app. And the valuation of Kuaishou is relatively cheaper. And Kuaishou is more popular in the rural town and lower tier cities, and more popular with the young people as it can provide more video in sports, music, dancing, movie stars, and beauty makeup, which is more welcome by the young people. And Kuaishou is still making a loss up to the 11 months of 2020. It is making a loss of 9.4 billion renminbi. So if you look at figures, you may not be happy, but you do have to look at the potential. The revenue of this company is come from three areas. First is the virtual gift. That means when the fans are watching the video, they may like to tip the live streamers. But there's a risk that the government regulatory body may have a cap or ceiling to limit the number of tips from now on. And the second revenue source is the online advertising. It increased to 32% last year, so the trend is quite good. The third area is e-commerce. It will cooperate with the JD.com to form a strategic partnership. So this area also is fast growing. The revenue in up to September last year was 204 billion renminbi already. So how can you apply this share? It raised 46.8 billion Hong Kong dollar. Only 2.5% will be the retail portion. If the share is being oversubscribed, which will be, the retail portion will increase to 6%, which means 2.8 billion Hong Kong dollar shares will be allocated. Assume this share will freeze 600 billion Hong Kong dollar, which is very common. It will be oversubscribed by 200 times. So how can you apply? Three ways to apply. First, use all your family members, of course they must be over 18 years old, and then open a broker account to apply for one lot, 100 shares each, paying 11,600, and try your luck. Second is use margin. You deposit, for example, 200K in a broker or a bank, and then borrow another 1.8 million. So the gearing is 10 times. So you can apply 200 lots, and hopefully you can get one lot or 100 shares allocation. So if share price went up 50%, then you can still make, say, deducting the interest and the transaction fee, you can still make, say, 4,000 Hong Kong dollar. So the third way to apply to get this share is not to apply, is to buy the share when it is being listed. But my suggestion is that do not buy on the first day of listing. You can go to some broker which can offer the gray market for you to buy and sell. So go to this broker, open an account, and try to buy this share one day before it is being listed in the gray market. So if the share price, say, only rise 30-40% above the IPO, try to buy in gray market, because the next day when the share is being listed, well, it may highly likely it will go higher. So this is the three ways that you can do on this share. Good luck.